Hello everyone, welcome to the Adkup Show. Today we are exploring the fascinating landscape of cryptocurrencies, where they stand, how they challenge the traditional financial systems, and what the future might hold. This isn't just another tech trend, it's a revolution in money, power, and privacy. So, without wasting time, let's get into it. So before going into details, I would first want to give you a brief about what exactly is a blockchain on which cryptocurrencies like Bitcoin, Ethereum, etc. runs. A blockchain is essentially a digital ledger of transactions, but unlike banks or any financial institutions which has a base and source, blockchain is unique because it's distributed across network of computers rather than stored in one central place. Think of it like a shared, continuously updated list that everyone in the network can see that no single person controls. So it's floating randomly without any starting or ending point. Now, how does this exactly work? So each block in a blockchain contains a number of transactions. A transaction can be anything from sending money to recording a contract. Each block has a list of transactions, a timestamp, a cryptographic hash of previous block. This is what links the block together like a chain. And finally, its own unique hash, which is calculated based on content of the block. Instead of one central authority like a bank, many computers or nodes probably around the world run the software and keep a copy of a blockchain. This decentralization makes it very secure because altering data would require changing it on all copies simultaneously, which is practically impossible. We might see some technology in future countering it, but as of now, it is impossible. Secondly, it's transparent. Everyone can see the transactions, but not personal details. It means you can see the transactions, but you can't find out what's the story behind those transactions. For a new block to be added to the chain, the network must agree on its validity. Common methods include proof of work used by Bitcoin, where computers solve complex math problems to validate transactions. Then we have proof of stake, POS. Validators are chosen to create new blocks based on how many coins they hold and are willing to stake as collateral. Each block's hash includes the hash of the previous block, linking them securely. If someone tried to change a past transaction, they have to redo the work for all subsequent blocks, which would be noticed by others in the network. This is the basic of how blockchain technology works. Now, moving ahead and coming to Bitcoin and its mining. So, what is Bitcoin exactly? Well, Bitcoin is the first and the most well-known application of blockchain technology designed as a decentralized digital currency. It is also the most popular and reliable cryptocurrency in the market. Now, how Bitcoin is created or mined. Basically, Bitcoin miners compete to add new blocks to the blockchain by solving cryptographic puzzles using powerful computers. This puzzle is essentially finding a number that, when combined with data in the block, produces a hash with the specific numbers of creating zeros. And it is a very complex process which consumes a lot of energy. The first miner to find the solution gets to add the block to the blockchain and is rewarded with new bitcoins. This is called the block reward, plus transactions fees from transactions included in the block. Bitcoin's mining difficulty adjusts approximately every 2 weeks to ensure that the new block is added regularly every 10 minutes, no matter how many miners are on the network. The high computational work required to mine a block makes it prohibitively expensive to try and alter past transactions. The reward system incentivizes honesty. If a miner were to try to cheat, they would risk their investments in mining equipment and electricity. As I said earlier, Bitcoin mining consumes a lot of electricity. Bitcoin has a cap of 21 million coin every 210,000 blocks, or about every 4 years, the reward for mining a block is halved, reducing the rate at which the new Bitcoin are created, which is meant to mimic the scarcity of commodities like gold and silver. Now, let's get into why cryptocurrencies are rattling governments and central banks. Traditional currencies are controlled by these entities. They can adjust money supply, set interest rates, and manage inflation. But here's the twist with crypto. Bitcoin has a hard cap of 21 million coin. No central bank can just decide to print more. This scarcity could lead to deflation, something most central banks aim to avoid. Now, there is another aspect to it. An individual will choose cryptocurrency only if he wants to stay anonymous or his confidence in government and central banks goes on decline. This means cryptocurrencies are at constant war with governments and central banks. So can I say that destabilization in government or central bank will empower cryptocurrencies? Well, think about it. The privacy aspect is another big deal. With cryptocurrencies, you can send money across borders without banks or governments tracking every move. This challenges everything from tax collection to anti-money laundering efforts. Remember the Silk Road? That was just the beginning. Now, places like El Salvador have made Bitcoin legal tender, showing how nations are responding differently. Of course, there will be new challenges in the future related to it. Fast forward to 2025, and the crypto sense has evolved dramatically. The total market capitalization of cryptocurrencies have been speculated to hit between $4.5 trillion to $7 trillion by some experts. Bitcoin price? Well, predictions range from $130,000 to potentially $250,000 without a strategic reserve. Showing the speculative nature of this market, we know for the fact that Elon Musk and Donald Trump endorse cryptocurrency, and China has slowly started lifting restrictions from it. But it's not just Bitcoin. Ethereum has transformed with its merge to proof of stake, reducing its environmental impact by moving away from energy-intensive mining. This shift has been crucial as the energy debate around cryptocurrencies intensifies, with Bitcoin alone once consuming more power than some countries. By the way, do you think the Bitcoin mining is a good career? Let me know what you think about it in comment section. Regulation is the elephant in the room. By early 2025, countries are in different stages. The US had its share of drama with SEC and CFTC, while Europe is pushing forward with MiCA, a comprehensive regulatory framework. Meanwhile, India has imposed a 30% tax on crypto income, showing how regulatory environments can impact market dynamics. I have said earlier that cryptocurrencies are a direct challenge to government and central banks. So governments around the world will actively tax it if they find that cryptocurrencies are a threat to their influence. On the tech side, we are seeing innovations like Bitcoin's Lightning Network for faster, cheaper transactions, and the rise of DeFi on platforms like Ethereum, where you can get loans or earn interest with no bank in the middle. The total value logged in DeFi has been growing, hinting at a future where traditional finance might take notes from this decentralized model. So what's the future for cryptocurrencies? Well, it's mixed with potential and pitfalls. Central bank digital currencies or CBDCs are on the rise. China's digital yuan is already in trial, suggesting a world where state-backed digital money could sit alongside or even compete with cryptocurrencies. But for crypto advocates, it's about more than just money. It's about new internet economy powered by tokens and some smart contracts. Now, let's not forget the cultural aspect. Cryptocurrencies have birthed phenomena like NFTs, unique digital assets that have changed how we think about art and ownership. The meme coins? Well, they show how community and culture can drive value, sometimes define all economic logic. So what's the big picture here? Well, cryptocurrencies are reshaping our financial landscape. challenging institutions, and empowering individuals. They are tools for inclusion in regions where traditional banking fails, but also speculative assets that require caution. The regulatory dance will continue and technology will evolve. But one thing is certain, this space is here to innovate or disrupt, depending on how you look at it. Thanks for joining us in this deep dive into the future of cryptocurrencies. Keep learning, stay updated, and if you're considering diving into crypto, do so with knowledge and care. Don't forget to like, subscribe, and hit that bell icon for more insights. Here's to the future of finance. Decentralized? Well, maybe, but definitely exciting. Peace out.